Hello my friends, welcome back to channel. Today we are diving into a topic that confuses many but is essential for everyone looking to grow their wealth. Investing versus trading. By the end of this video, you will learn the key difference between these two methods of growing your wealth and which one might be best suited for you. Let's get started. Investing and trading are two sides of the same coin. Both involves participating in the financial market, but their goals and strategies are vastly different. Investing is like planting a tree and waiting for it to grow. It is all about the long term. Trading, on the other hand, is more likely a high speed game of chess. It is fast paced and focused on short term gains. Let's start with the investing. This approach involves buying assets like stocks, bonds, or real estate and holding on to them for years, even decades. Investors focus on the fundamental analysis like company growth, industry trend, and market potential. The primary goal, wealth accumulation over the time through compounding dividends or capital appreciation. Investing requires patience and long-term mindset. Think Warren Buffett, not the Wolf of Wall Street. Now let's talk about trading. Traders aim to make quick profits by buying and selling assets frequently. These traders can last weeks, days, or even just minutes. Traders rely on technical analysis, chart pattern, and market news to make decisions. The main focus is on short-term price movement rather than long-term value. Trading can be thrill but also risky. Needs skills, discipline, and always connected with markets. Let's break down the key differences between investing and trading. In terms of time, investors think in years or decades, whereas traders think in minutes, hours, or days. Risk. Investing has low risk if diversified and held long term. Trading is risky due to frequently market exposure. Research focus. Investors focus on company fundamentals and economic trends. Traders prioritize price chart and technical indicators. Efforts and time commitment. Investing is more passive, whereas trading requires active participation and constant monitoring. Let's see pros and cons for these two methods. Investing pros: long-term wealth building, less time incentive, lower transaction costs. Investing cons: requires patience, slower returns. Trading pros: potential for quick profits, exciting and dynamic. Trading cons: high risk of loss, time consuming, high transaction costs. So how do you decide whether to invest or trade? It all depends on your goals, risk tolerance, and lifestyle. If you are looking to build wealth steadily and don't have time to monitor the market daily, investing is your best option. If you are comfortable with risk, enjoy analyzing markets, and have time to dedicate, trading could be for you. Remember, you don't have to choose just one. Some people invest for a long term and trade on the side. It's all about finding what works for you. Now that you understand the difference between the investing and trading, which one appeals to you? Let us know in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell icon so you never miss an update. Thank you for watching, and I will see you next time. Stay happy, stay healthy.